Good morning, class. Welcome to Homeroom with Unc and Market Monk. Morning, P. How's your week?
Oh, really good. Just had a pretty sizable home run with Trade Desk to close the week, and overall, just nice moves and some names I'd scaled in on, for a couple weeks. Some quick hitters on crypto, so just really solid overall.
Nice. Yeah, I talked a little bit last week, ironically, with Hims about checking all three boxes of, the ones you kind of want longer term, your swing trades, and then your quick hitters. All three of those boxes did real good for me this week, starting with Hims and Disney. Um, Good companies. I'll usually have a position in those, and we have pretty good levels on them. And then more of the swing looks, are stuff that we turn off and turn on with Lyft to Rum. Did really good with
Yeah,
those. And then the quick hitters from LegalZoom, FSLY, and the QBST, or yeah, QBTS, sorry, did good on the quick hitters on those. So pretty good week for actually being kind of on the light side for me.
yeah. I had solar did well for me and oil as well, and I mean those were two sectors where it was kind of a reset in flow and the setups, and just move back into those. Bought some significant red days on some of those, and came out well above my original entry on those. And yeah, it's I mean, if I try to average down when it's planned that I'm going to do that. We had talked about end phase several weeks ago. I was ready to keep adding down to like 35. So I started off really small with it, and I never got a full position. But you don't really need. I mean, who cares? It's just I'd rather have a smaller position and not get everything I wanted than you plant a flag and you're overexposed to it, and then you cut it down 10%. Um, it doesn't make a lot of sense to do that, and makes a little more sense in solar given what it's done. But something like semiconductors, JV semiconductors, like we talked about, I mean, that's part of a pretty big market thesis and idea. So they get some bad news, they're probably going to recover. And it's probably going to happen within days. They'll get half of that drop back, and then you're just kind of back to work. So instead of just having that as the trade and just having a firm stop, I think it works a little better to scale in and give it some time,
Yeah,
especially with shares.
I've learned. I mean, I'm 2.0 on that theory, I guess. Um, I when I started, I remember learning that and think I cracked the code. Um, just don't go all in, and then if you only get 25 or 50% of what you wanted in, it's better to kind of spread the load. Well, that also turned into as you evolve that, the next step of that for me was the where the be is cheap or be cheaper than Unk comes in. And having the
Yeah,
levels, like it just the best example. I'd rather lead with an example here than try to explain it away. But Roku currently is it. I think it touched 58. I'm just a little bit cheaper than that, and where I'm going to start, and that trade will come around for me. And it's just you kind of learn through the years that you'll have time, and um, it's not going to usually go without you, and very rarely do you not get that opportunity to buy back in. So um, I'm um, adamant that those are the things you need to start with, learning how to do that because it's having a little bit of flexibility or nuance to your trading is way better than just picking a price. And if you're gonna pick a price, um, it's usually gonna be psychologically hard because it's gonna be on some pretty big pullback if you're gonna get a good entry. So um, as opposed to trying to do that, it's way easier to spread the load when you do have some levels picked out. But again, Roku is the best example I can think of. You guys were buying at 58. You played it back to whatever on the option side. For me on the share
Yeah.
side, I'm going to need below 55 and before I start. And 55 to 52 is kind of my area to add. So, adding in there over time has worked well. You just got to be patient.
Yeah, that makes sense. And it's one of those setups where the option pivots bracket the level you're talking about, and um, that gives you so many different strategies you can use to trade around that. One of them being quick hitters off the option pivots, because those flushes underneath it, especially aggressive flushes early in the day, are going to come back, and you're going to get a 3 to 5% bounce. But then it's going to bleed out most of that recovery at the end of the day. It's just going to keep doing that over and over again until it breaks further down. That's the most likely thing um, that's going to happen. The charts that don't come back, the all-time high charts, Spotify and Duolingo and ones like that, like they they just set back up. And the I mean the hard thing about those, like, they need time to set back up, or anything you're doing to, like, usually match up to that. Like, you'll have some like shorter term levels and things like that, but the big historical stuff, it took a while for the Roku's and Twillos of the world to set up, and for us to like them. So that in and of itself is, kind of a different kind of trade, and um, I try to reflect that in my notes as best I can, and it's where the kind of the quick hitter term came from, was setups like that. But it applies to others as well. Tesla can be that way sometimes. There's spots where it's like, okay, this is a great spot for shares, and then there's ones where, okay, I think it's going to react to this pivot on this day, and then I'll talk about it then too.
Yeah, like I wasn't trading PLTR a week ago, and it was definitely on your
Yeah,
radar. And I'm more of
yeah,
a
yeah,
more interested in the Boeing, and currently, I guess we just missed Disney, but that would have been another one that when Disney checked back or Boeing checks back onto the level. Yeah, the historical levels are when you kind of do want to be more patient as opposed to the higher lows. I think is what we're talking about here.
yeah,
Um,
yeah,
that you don't want to be as I guess bullish into them. You can still get a piece or whatnot, or if you're long term, great spots. But I just can find 10 to 20% that possibly can go 50, 100% on other charts
yeah,
as opposed to the charts that we're talking about here. That even a good pullback. Um, let's go Tesla. Even a good pullback here is still a Tesla's ran and ran and ran, and it's maybe what 20 to 25%, and people are playing. It's a playable range. It's just not how I choose to play short or long term trades. Um, I'd rather have it closer to the level,
yeah,
or just be diligent with my percent. And just taking money's never bad. I had it, not necessarily a note, but a thought this week. Like, I don't care how you're investing or your account size. Like, you really should have, if you're messing with us, you should have 5 or 10K on the side that you're just okay with getting 10 to 20% out of that every 2 weeks,
yeah,
and
yeah,
and just having that kind of account, because that's the basic structure. And then occasionally, your stop loss doesn't get hit and it continues to run. I haven't heard it from anybody, but Groupon's a great example of that. If you had those
yeah,
eights and nines when you were on Groupon, like there's no way you should have got stopped out on the second half of that trade. And you just kind of learn how to manage that and take that percent over and over again. And um, along the way, you find investments. Along the way, you find longer term swings. But the core of it is that 10 to 20% share side is kind of what we're looking for, and then protect yourself with the rest of the position, and
yeah.
and yeah. continue to update the plan. So yeah, they're out there. I was surprised with how many, kind of getting the bigger picture. I was surprised with how many 20% were in there at the end of the week. I said at the beginning of the week, I could live in this market all my whole life if the down days are 2-3% down, but the up days are 5 to 10% up. I mean, I love that ratio.
Right, right.
3 days down and 1 day up kind of cleans it out, so it gives you 3 days to get in. It seems a little bit more bullish with what was going on at the end of the week to me than even I anticipate currently.
Uh, yes, I mean I've spent probably the past 6 months saying that I don't see any tech leaps. I don't see tech leaps, and so and to me that was indicated that flat or down, and that's what happened. Well, now I am seeing tech leaps. So the same kinds of ones I saw the last time the market just went on that crazy run. Now I don't know that we're going to do that. I kind of doubt it, but yeah, I mean whales are positioned for upside in ways where they're not really trying to time it. They'll hedge it along the way with the shorter expiration stuff, but the big picture is up, and so that that changes how I trade a bit, and what I'm willing to hang around in. Nvidia 95s, I'm not planning on getting rid of anytime soon. Took some profit on it already, but those could be around a while. And AVGO 180, same deal. So I think there's room for that. It's something we talked about. You can't trade the minute chart on a big macro thesis, and that's what I see happening all over Twitter. Is they want to talk about, they want to nitpick the UK trade announcement as being kind of bullshit, and sure, I mean it is, but that's not what's going to move. That's not what's moving the market. And tariff news that comes out is likely to be positive. If it's negative, we've seen that that's pretty short lived. So yeah, I think it's really hard to have a sustained short of very much right now to me, and it's just not worth it on the option end, and certainly I can't imagine it being worth it on the share side of shorting. So you just let the 3-2 market play out and then look for the down days. We mapped it last week that we were probably going to have a pretty sour start to the week, and then it took off from there. So so stick with the plan as far as that goes.
Yeah, I mean, having an idea and then it playing out, or having a general thesis and it playing out. I don't know how it does anything but make it easier to trade, and it might be because it's my thesis, but
Yeah,
that Mag 7 pullback for the first 4 months was I don't know, I don't know how else to say it. It was a good opportunity, and then to see the divergence or the deviation between the smalls recently and them, as we're pivoting around a level that we thought in the indices should be a pivot. Um, I don't know what else a bullish setup is supposed to look like. Like for me, it's the writings on the wall that we're just waiting. Market runs on speculation. It's very unclear right
yeah,
now, but as soon as they can get I guess just a beacon of the rules, we're ready to play the game. And if you just look at the Mag 7 for the most part, most of those charts got 30%, 25% just to get back to the first of the year. It's going to set up a pretty short-term bullish environment to me to when we do understand the rules. And then it's just that transition from, all right, we know the rules, we've had a little bit of time, and when the rubber hits the road, does that actually come out as positive for companies? So short term, I'm very, very bullish, but it having substance or follow through, that's totally a different story.
yeah, and the other thing we talked about with earnings and It was
Low bar.
why I traded Trade Desk the way I did. Expectations were very low, so it was likely that they were going to beat that. Trade Desk also, there isn't a Chinese container ship of Trade Desk DVDs that's affected by a tariff, right? So like
Sure.
a lot
Sure.
of those that went down with the market, that aspect is pretty irrelevant to them. So and just so much room above, the way it consolidated, all of that. In particular, the call I posted was pretty much in the money, um, and that's more expensive. I do that in a situation where I want the intrinsic value of the contract to carry it. So even if desk only went up 5%, that trade was still going to do pretty well. Now it goes up, 25%. Obviously, the thing goes nuts. You take it's 100 shares, every dollar is $100 basically on Friday. So that's why I traded that one. But
Great way
but
to
that one
trade.
also met the criteria for shares weeks before that, and or longer term options if you wanted a combo there. So the earning setups that have kind of all of that going for them are really something to look for, and it's why the ER Casino doesn't have 30 setups a week in it. I do try to be pretty selective. And there were a few duds, but if you did all of them, you're up probably, I mean, at least $800 last week, something like that. So that's why I keep doing that room, and it's why if you're gonna gamble on a setup, there are ways to stack the deck in your favor a bit, and so that's what I try to do. Um, you talk about all the time, like my posts aren't random, or I don't post for fun, or whatever. Well, the contracts I pick are not random either, and sometimes people ask me why I picked what I did, and I'm always happy to answer that. I don't just volunteer that because I'm like, is this useful to people or not? If you want to learn about how I'm doing it and why, I can always definitely talk about that. But with Trade Desk in particular, that was why I was in the money on the call.
Yeah, I think I like the ER page. I just think it exposes people to a lot more um, sectors and stocks that they probably wouldn't trade or wouldn't have interest in trading. And then they kind of learn
Yeah.
about how news affects stocks, and you see it all. You see it all over there. You see good reports and bad guidance, and how that affects things, and it just gives you more of um, a third eye to market conditions and what to kind of look for around events, because it's never the same. It's literally like waves in the ocean. It depends on the day and where the moon's at and stuff like that. There's been
Yeah.
we've traded in some environments where it didn't matter what they said, it was probably not going to react good. And then
Oh
playing
yeah.
the
Yeah.
backside of that is more important. So I like ERs just for that, even though I don't trade the same way you do around the events. Um,
Yeah.
the main point that really stuck out to me here are a good um, point that I think you made, but you didn't try to make it, is any stock. Like you said it with 100 shares on Trade Desk. You take it to the 50s, to the 70s. That's a great trade. Figuring that out for yourself. And I'm not only talking about the 100 shares part, but I'm talking about, are we trading stocks that are $50? Are we trading stocks that are $15 to 20? Figuring like
Yeah.
that kind of that price range that you like to trade will do. I think it's bigger than trading the actual stock, because you need the range, and then um, you need to be okay with. Let's just use Trade Desk and some $15 stock. You need to be okay with it. Can I put $500 in here? To take out
Yeah.
$200, or do you need the $15 one where you're only going to put $150 to take out $50 in? And what just kind of works better for your mentality? Um, and that for me, I mean, 10x that, and then you're basically in my ballpark. Sometimes it's $1,500. Is that okay to make 500? or am I going to put in 4 grand to make 7 grand? And that's that's the skill and the finesse that I think really will help a trader along. Because when you figure that out, you kind of know where to shop a little bit more. Um, you kind of know which ones that when they do set up for you, you can attack. I think you said it probably. I haven't heard you say it in a while, but you're like, man, I really like stocks that are 15 to 25 bucks as opposed to ones that are $3 or $4. And
Yeah. Yep.
from the share side, I get it. I totally get it because they're just so volatile down there when they're a little cheaper. So for me, just being a little quicker has always been the way. Like I don't like to swing stuff down there as much. Um,
Right.
without being able to re-add because I know the ranges is going to be so dramatic both ways on stuff that's down in that price range. But the overall of that is like having that blueprint is going to do you a lot of justice than just trying to find a name and then oh crap it's $140 stock and I only want to put $500 in. um, yeah, it just for me it takes a big part of the mental out of the game.
Yeah, yeah, definitely. And I mean, I with the smalls when we started this whole thing, I didn't even know if what I was doing was going to work with those, and part of that was I just had such a bad experience trying to trade shares on those names, and that was because I only found them after they made a big move,
Yeah.
and I learned, I learned the ticker and saw people trading it and just tried to, and even I wasn't trying to go 100% on those, but I was buying things that were in that COVID market up 30 to 50% already, and it's like, well, I just want to get another 20% out of this, and then it just plummeted, right? And so that was what got me into options and oil and steel and all that, and then I figured out that the flow reads worked pretty well on large caps like John Deere and all that. And I just like kind of took a chance and said, okay, like, well, let's just see what it looks like. And all of a sudden, I think Play was probably the first big, first one like this. And I'm like, well, shit, this does work. And then started to find the smaller ones. You get into the ones like with the 2.5 increment strikes, you can read those. It's a little different, but yeah, I mean, it works. It works without a lot of tinkering or alterations. I got about 12 different filters I cycle through, but I don't really change them that much and haven't in years, and it just sort of keeps working through several different styles of markets. So I've been pleased with what we've been able to do.
Yeah, the names are the bigger names are definitely easier. Um, us trading like a let's say like a Lyft or a Hems, those are probably two on the Disney even. Those are definitely easier, probably a little bit more robust when it comes to levels and flow. Um, but you get stuff like Rum and even Run, um,
Yeah.
West Coffee, stuff like that. Jamaji, you're not going to get them all, um, but you're gonna get enough of some of them, and that's kind of how I always looked at it. Like you're not gonna be able to just to play smalls, um, and you're gonna have some quiet days if you only trade the 10 out of 10 names. So having the right mix
Yeah.
for me and just not necessarily an extra check, but um, an extra candle, probably more than an extra check on those charts have been great for me. And then um, AG is probably a good example too. I mean, if something's just hanging out, playing the local range, even though it's been 5 months, um, can be very very profitable. And then you're just ready for the bigger moves. So mixed basket, I guess, is the point I'm trying to make here. Is if you are only one dimensional, um, the market's not always going to be in that dimension. So, and I think that's important currently because if you're just like a trade, back to that, if you're just a spy trader, last week was probably really hard for you. If you played
Yeah.
some of these smalls or some of some of the ones that came off the collab list last week. You had a really good week, so um, I guess that's where
Well, and it's
it's
something
it's where it's coming from. Is I'm seeing those people, those one dimensional people kind of missing this um, last few
it's
weeks that have been
something we
really
talked
good.
about with Spy was that the biggest part of the move has been pre-market, and so that that makes it really hard because if you're gonna swing overnight, you're you're kind of 50-50 as in terms of where it's gonna go um, to start the day, and you could also lose if it's flat. So there's two scenarios where you lose and one where you win. You have to hedge the side that you like, so that eats into the profit of that move too. If you just want to just go in clear on the day and buy SPY options, well, now you're working with a 1/4% of a move, or it'll grind up and then collapse for a bit, but you don't really have a great level um, to see that. So you're taking your scalping with your $50 and trying to turn it into 200. Well, the 50 turned into 75 in 5 minutes, but that's not enough. So I'm going to hold it. Oh shit! Now it dropped, and now it's worth 40. Do I just cut this and lose my $10, or let it go to zero? They tend to let it go to zero, and do that every day, and it kind of adds up. I said on Twitter the other day, I can't ever trust anybody who's this nonchalant about money, where they're like, I'm just going to buy this zero DTE and set it and forget it. I mean, what are you doing? I don't care if it's $20. Why are you doing that? It just doesn't make any sense. I mean, you really should just go pull a slot machine lever. You have much better odds than throwing $50 at a zero DTE at 1 p.m. That's just not how to do things.
Yeah, shit, I'm a walking general ledger, and it took me forever to get your trust. No, yeah, no. Again, though, that does not that I want to get too much into the content creators, but just a different angle, and I mean, that's why I started the Real Traders Talk different because some of the stuff those guys say, and you could just tell it's just for engagement, so to speak. They're completely just get a little bit over there. They're completely lost right now, which that's usually a good
Yeah,
sign for me. That means we are not necessarily changing market direction, but um, we're in a volatile market that they don't understand. And I think I'm kind of good question for you. I still kind of see and it goes with the SPY at where it's at that 565 I've been talking about. We're still kind of in a to it, not through it.
yeah.
Um, and I don't see how I don't know how you see that, but you can even take trade desks 6911 one line chart for me. We got to it's staying up here and through it. That's a little bit different story to me. And the same with SPY, the same with a lot of charts. We're getting back to a level that um, does have historical significance. So I don't think we're
Yeah.
just going to run right through them. Um,
No, there's tons of setups that are they're finding equilibrium and they're going neutral, and that's what Solar did. And so for Solar to make nothing good happened for Solar
God no.
news wise, really, but there's a lot of open interest out there, and a lot of whales are offsides, so it has to go up for them to reset and make the next move. And the next move could be just right back down, but they got to find that equilibrium. So I trade it to that equilibrium, and then we go from there. And so for SPY, those moves towards neutral are much smaller, obviously, and especially given the recovery it already made. And this is why when people are bullish on Nvidia right now, it's not that I think they're wrong. It's just that where were you when it was under
Yeah.
$100?
Yeah.
I mean, even if you don't do TA, it's like this stock, the most important stock in the market, blah blah blah. It's under $100. So just psychologically, it just seems like that's probably a good place to buy it, right? And you know, is it going to go to 70? I mean, I guess it could, but um, I guess just buy more at 70 then. Is because the point is big picture, is this stock going away? And no. And I said over a year ago now that chips are a national security issue. And when the government makes something a national security issue, it doesn't tend to just implode. It's not the Renaissance tulip market or something. I mean, it's just that sector dominance is really important to the country, the market. There's all this passive flows that happen. So yeah, you get Nvidia under 100, you just go ahead and buy the thing. But to say that, okay, so now it's in the 120s, it's going to 150, 160, 170. What is that really based on? Except that you're piling in late to a rally that's well underway.
Yeah, they completely rudderless ship. I don't know how else to put it. Just a
Yeah,
rudderless ship.
yeah,
To answer the point of the question you have, I sold Nvidia at 765 ish or around there in the 760s. If it went to 76,
yeah,
which would be the adjusted price, I would be all over it. Buying it under 100 didn't necessarily get enough, never will. Because you're
yeah,
anticipating for that drop, or you're setting yourself up in case it does drop down to the 70s. The short term trade was always back to the 130, 416. I searched the group for
yeah.
everybody and posted my comments on that. I don't know if you've seen that in main chat, but
I did. Yeah, yeah,
I mean that's the that's the plan. If you look at the dates on that, that's 8 months old. So I mean, planning for that pullback back then was what I was looking for, and having those plans and waiting for them, I think is what separates the men from the boys. I mean, I didn't know when I was
and
going to be able to trade Nvidia. I didn't know when I was going to be able to trade AMD. Um, but
yeah,
I have a plan. I have a plan, and it's not going to pivot because of anything. It is based off of largely based off of TA, and I've been wrong. I mean, I could say we could kind of say I'm wrong on Tesla currently, because when it was down there 220s, I said no, we're going to wait for the 200 break and get closer to my level, and it just didn't happen. Um, I'm not going to sit here today and say I think that is still on the table, but that's still my plan if I'm getting back into Tesla the way I trade it, and it's just how it is, and that can change through time, uh,
yeah,
but but it's not going to change because of one move or one weekly candle.
yeah. Exactly. And my version of your Nvidia trade was AVGO, which I started buying. It was like the 680s, 800, and it made the move to 12, 1500. It split, whatever. So like on the pullback here, um, it was at 220 or so, and I had posted like I just can't buy it up here, and then it dropped down, started buying again at 180, and then took off. I don't have near as much as I did
Sure.
the the first round, um, but that's strength in the stock, and you do kind of want to see that too. So even though I didn't get what I wanted, um, it's kind of healthy for the market overall. And instead of getting full AVGO, I get into some of the JV semis because there was still plenty of chances to get those, and there still are on some of those too. So that's kind of where your attention goes with that. I had a quick question. It's a little somewhat off topic, but it was something I'm curious about. I used to see posts about OTC stocks all the time on Twitter, and like I didn't like try to follow that stuff
Yeah.
or anything like that. It was just out there, and those people who were trading those, they never talk about those anymore. And so I'm just wondering, it's not a market I follow because there's no option flow or anything, but what happened to the OTC stuff, and is meme coins the new version of that, or what
Yeah.
is your take on that whole
You,
setup?
you're definitely on the right track there. I don't think there's real OTC traders in the world. Like, I don't think there's people that are successful trading OTCs.
Yeah,
It's just a market that trying to think of something in real life that would be comparable. But it's, I mean, it's a market you have to have. It's basically, stocks that are not necessarily unregulated, but just have a lighter set of rules because they don't meet the criteria of the regular rules. So they're,
Yeah.
I mean, they're shady companies. I don't know how else to put it.
Right.
If
Right.
you ever watched The Wolf of Wall Street, it's those pink sheets. The guy that just has a little. I mean, it's where Apple started, so you can't knock it too much. But a guy that just has a little something that he does out of his garage. Um,
Yeah.
it might be a good idea, or he might think it's a next $1 million idea. Um, I think you're 100% right that the people that used to use that space um, went to meme coins, and I'll be honest with the reason I think why is I think it's easier to win on meme coins than it is OTCs. It's just the easier
Yeah.
thing, and the what they're appealing to is not necessarily the person without money, but the person that wants to control their size. I mean, if you can buy something that's a half a cent, you can get 100,000 shares, and kind of feel like you have a big position when you really don't. And it just kind of catered to
Right.
that psyche for me. But yeah, meme coins, 100% meme coins, just more effective, easier to trade even than
Yeah.
OTCs. It's not easy to trade OTCs as far as
Well,
getting
yeah. I mean,
getting filled and
meme
finding
coins
a
were
broker that actually carries the ones you want to trade. Sorry.
whereas meme coins were born in the apps, right? So
Yeah. Yeah.
like OTCs, it's these existing brokers. I remember like E Trade lets you buy them. Other, I don't think my Merrill Lynch account has OTCs available. Um, and I know that like Robinhood and Webull don't do them. So and that actually tells me more than anything that so if Robinhood and Webull, given the style of trader that they cater to and all of that, aren't going to mess with those. There isn't a lot of money to be made even for them on the fees. And it's just not even worth it for them to mess with that because they don't reach that decision based on a desire to protect investors, obviously, given the things that they do offer.
Sure.
So yeah, that space just sort of dried up and was just something I noticed.
I think it comes back, but you're going to need a pretty damn bullish market. I mean, that's a sign. That's
Oh,
a
right.
sign that
Yeah.
we're in a good
Yeah. Yeah.
market if those guys are
Right.
back because it's everything to the moon and these have the
Well,
biggest
because I guess
opportunities.
it means that some of them get out of it, right? That some of them become listed stocks somewhere, as opposed to delisting, which has been the sort of the
Yeah.
more common
I've
than
probably I've probably
getting
seen
added.
10 to 1 ratio on stocks going OTC as opposed to
Yeah.
becoming um, listed
Right.
on
Right.
on the main exchange. So
Yeah.
yeah, I don't. Yeah, that's a pipe dream. Just yeah, stay away. I don't know what else to say. Stay away. I trade some
Right.
shitty
Right.
stocks, but those are a little too shitty. So,
Yeah.
um,
Yeah. I'm with you.
God, do I say it? You're better off trading meme coins. Do I don't actually say that out loud?
Right.
Golly, I'm getting some boring stuff. I know Bitcoin's at
Yeah. Let's do it.
104. I know you want to get over there.
So oil, um, very
60,
positive move
61.
there, and it was just way oversold. So I mean, there was just a lot of opportunity in some of the stocks we follow, and you didn't really have to get creative with it. It was just the big usual names were in a good spot, and pretty much all of them moved 8-10% on the week. And again, um, that's just them finding some equilibrium. And I think oil can go to $70, but I mean, what you really want is just for it to stabilize and get in a channel because those stocks are going to grind up if it does that. So I'm liking oil a lot. I'm not really adding much because I kind of got what I got um, off my entries last week, but all's showing up. So not really looking to add more oxy, but there's definitely are uh, some $8 smalls set up to go to 13, that kind of thing. That's what I see there.
Yeah, I'm kind of in the same boat as you. As um, got have what I have, and I know the moves and the oils are usually you got to look at them more from a quarterly standpoint than a day to
Yeah.
day or a month to month standpoint. So still a good time, but I think we are turning the corner here finally.
And copper holding up very nicely. Just kind of parked in the mid fours, set up to break five and retest those highs. Um, Geopolitically, whatever's going on, I mean, China's a big player here, but I think you kind of buy the red days on some of the steel and copper and aluminum, and I think you'll do pretty well.
The the weekend summit here with the EU, um, the the steel news I think is the biggest news that's going to come out of that. Supposedly uh, they were nationalizing the steel over there as part of the
Yeah,
deal, just to make it a little more fluid to trade with us. Um, I think whatever comes out of that's probably the biggest news over the weekend. So still in the mindset though, those charts aren't moving until we start building stuff. So kind of
yeah,
be
yeah.
mindful of that.
And the U.S. Steel merger is still floating around, um, so there's that too. And then we get into gold, um, still extremely strong. Did not collapse as some people predicted, and that's still not very likely to happen. So, yeah, plenty of gold charts that still could play catch up, I think.
Yeah, like last five. I guess those are all silver though. Well, that's gold. But yeah, last five. I like the miners still. They just didn't. The thing is they didn't move. I mean, some of them did. There's some that are all time highs like AEM or whatnot, but um, a lot of them didn't move. And the longer that gold stays up here, I think that divergence has to be fixed. So I like a
Yeah.
lot of the miners. I still love miners, and that's both side gold and silver. But um, yeah, can't go wrong there for me. Highly up on my watch list next few weeks.
Yep, and then the same with
So
silver
silver, yeah,
setting
all the
back up. Now,
same.
silver did give you a better dip to buy than gold did, and again, it just kind of found an equilibrium up here. It's the 32 to 36 move, and follow through to 40 plus. I mean, that's still my read on silver, so not much has changed there.
40, huh? Jesus.
And let's see here. Oh yeah, I was going to talk about this one. The 10 year. I said last week, you want this to just calm down. If this calms down, a lot of your setups are going to do very well, particularly high beta stuff, SAS, all that, and that's what happened. So again, you kind of just keep an eye on that, and it's one of those. It's confusing that I mean, to me, you don't want this to just collapse, and you definitely don't want it to do a moonshot to 4.8% either. So you want bonds to just kind of calm down, because if bonds are calm, then stocks can kind of do their thing. You don't really have to get into it more than that to trade, in my opinion. You're not trying to win a Nobel Prize in economics in the bond market, but yeah, I do keep an eye on it just to make sure it's not spiking or doing anything crazy, because you'll tend to get a lot of the pop and fade happening when that's going on.
Yeah, I pay attention to it. They're talking about it. It doesn't affect my
Yeah,
trading much. Um,
right.
but big picture for cycles, I do think it's important.
Oh yeah,
Not
yeah.
necessarily a leading indicator, but just something you should be mindful of. Um, I'm learning with the rest of you, so
Yep.
that's what I got to say about that guy.
Uranium.
Jesus,
Here's your move. This
grinding.
is what we talked about, where it's kind of like you don't really know. It's behind the scenes. no wicks on these candles. It's just kind of a one shot deal every day. But yeah, this made the move you look for. Kind of broke out of a bit of a downtrend, and a lot of upside with uranium, and even the energy, nuclear energy companies that don't have reactors kind of kind of deals. The grifter fundraiser types look pretty good to me too.
Yeah, tradable range. Um,
Yep.
Again, it fits the same thing said about steel, and sometimes you just got to write that down for certain sectors. Um, Uranium, that's what I've come to know though. Like they just need the news, they need the plan, they need the pathway for something to happen. Um, and we're just not getting that overall right now. But those charts have a lot left in them, so the night's still young. You just have to wait for their turn to be the birthday boy, so to speak.
And before I get to Bitcoin, I just want to there's no commodity to follow on this, but the solar ETF. I mean, we're just kind of a blip in terms of this upside. So I want people to have this big picture in mind. And my one line chart is $57 and change. It's 31. Yeah, long way to go. But again, I talked about these stocks finding equilibrium. That's probably about $40 on this thing. So if the ETF in solar has a $9 move from 31, that's possible and probable. That's First Solar 200 and Enphase 65 and Run 12 or whatever. So it's there's definitely some range there. I just wouldn't get in investor mode on solar if I were you. But I do think that there are. I don't have to tell you that, but I do think there's definitely some trades here to look at.
I like this better than individual names. I think it'll be easier to trade for people. Um,
Yeah, that makes sense. Yeah.
there is one or two of those names I do like just because of the range, but I'm lacking that extra check in the sector, which we'll probably talk about here in a little bit. Um,
Yeah.
but yeah, if you're just like I want a piece of solar, I don't think I think this is probably the way to go. Or blindly follow my bullshit because I'll pick
Well, yeah, you
I'll pick the
you don't
one.
have to you don't have to pick winners and losers with it.
Yeah, yeah.
And real quick, I can tell you what's in it.
Oh, it's all
Uh,
the ones you talked about, Enphase and First
yeah,
Solar,
yeah. It's just I
Net
mean, I guess
Tracker, Enphase,
in
Run.
terms of the percentage to give people a
10%
idea.
First Solar, 10%
Yeah.
Next Tracker, 9% Enphase, 5% Run. I don't know what
Yep.
GCL Tech is, and then you got some 3% Sedge down there.
Yeah, and Canadian Solar. It's some of the Chinese one, the DQ, stuff like that, and then you just get sort of
Which
kind of
one's Canadian? Is that Clearway?
uh, Canadian is CSIQ.
Yeah, but I'm not seeing it on this list. Cause they just have the real names of the
They're only
companies.
2%. It's only 2%.
Oh, that's why it's not on this list. Stops at 3.
Yeah,
Okay.
yeah, and same with DQ's 2%. But so yeah, basically I mean, First Solar is the heavy hitter. Uh, Enphase up there too, but it is so basically like you avoid what happened with Nova if you get tan. So
Yes,
that's
that's a
part,
good call.
and what happened to Nova could happen to another one of them to a lesser extent probably, but yeah, you avoid that. I mean, Sedge is notorious for your 20% drop on after hours, so it's tan's not going to do that.
Nova's a good lesson here, but that happens with every growth sector, whether it's Bitcoin, EV chargers is a great one, EVs in general another
Yeah,
great one, solar great
yep,
one. You're gonna go through these cycles, and you're gonna have some names. The next time you go, some of those names are gonna have fallen off the list. It's just how that growth works. All
yeah,
companies aren't gonna make it. So knowing that when you're in growth is kind of important.
yeah. I used to trade Workhorse
Yeah.
and names like that, they're just gone. So,
Hmm.
yep. And
Mullen.
all right, so then we'll,
Mullen.
yeah, yeah, exactly.
I mean, come on now.
Uh, Bitcoin, here we are,
Yeah, what the hell?
under 3,000 and change. Might be higher now. I don't know. Let's see. I think setting all right. And that's
104.
up a little bit. 104. Yeah. So yeah, I mean the setups were there. I posted the names. It's pretty much just like pick one. MSTR was kind of my big trade as far as that goes.
You messed that up there, P.
Yeah, right. MSTR. Yeah,
You,
it didn't look right.
you pulled
This
it
should
up.
have a bunch of lines on it. There's all the lines. So like, I 274, that was one I said, we're not really going to fall much below this, and then have just been, trading it along the way. Each one of these spots. I had someone ask me if there's anything between 370 and 420, and I said no. It's my biggest zone on it, and it moves quickly through there, and that's exactly what it did. So yeah, I mean it's kind of hard. It's hard to add up here. I mean you're definitely in quick hitter mode up here, but we had a lot of
Well,
them.
yeah, stay on MSTR. What else you got up there? I'm
Okay.
just curious. Let's talk about
Oh,
that.
sure. Yeah.
What else you got?
Let me,
450, 480, 435. Okay, okay.
yeah, and then
So,
the top one, and these levels came from before the split.
sure.
These aren't. So these aren't. This is what it did. The last time, and so this is, you know, the stock revisiting these levels. Whereas, the actual price of this, not accounting for the split, is $4,000. But the for whatever reason, algo programming or whatever, it still reacts to these levels. So it's been really useful for me.
I was gonna ask. I think Thursday because you were mentioning it breaking out Wednesday or Thursday. I got 466.88 Professor Purple line. I put up here. I'm sure it's a pre-split number as well. Do you see that tested and or breaking?
Yeah. So my other my two option pivots bracket that. So the flow on this, they're setting up for 500 in the flow, which is a bit of a trap. It probably won't get that high, but it'll get just below that. So yes, I do, because I kind of think Bitcoin is going to go to like 120 or so, and that would match up to another 120 $150 on MSTR.
Nice. All right, go to right now because that's the one I trade.
Yeah.
707. It was just safe. It was
Yeah.
safe down there.
And this is I brought this one up to say that my only line on this is this 1150
Damn
area, and if you zoom out a bit, you'll kind of see why, because it was this consolidation under $10, with the flow was saying 12 or 14, and then it did that. We're just right now trying to get to that spot again for a breakout to $14 or so, and so that's what I see here. But again, I mean, it's so much easier to have your average down in the low eights, take your money when it reaches that neutral spot, and then you can see what happens. Who cares? With crypto, I want to get to a point where what I have left is really low stress, and I don't really care. Like if it's going to drop 5% in a day, whatever, it's probably going to go up 8 or 10 tomorrow. It gets that volatile and chaotic, and to stick through that, the shares have to be free, or the roll has to be free, or you're constantly micromanaging and hedging, and that gets difficult, as it makes the move. So yes, 16, 18, definitely possible. but don't wait till it's 10 to try to trade that move.
Yeah, your 1150 is real close to volume profile levels, which is like 1118. So love
Yeah,
that line on
yeah,
the chart. Um, I learned a long time ago, and I don't really talk about it a lot, but well, first thing I'll say is if you got into crypto when you brought it back up this time, you are not bagged. You're just not. There's
yeah,
no way you could be bagged in crypto. And the second thing is I learned a long time ago that the sizing, um, crypto's gonna move dollars. Like you're gonna get the 7 to 10, 11 move. You're gonna get the 15, 11 to 15 move. So getting that sizing right, and back to what you said earlier about just the every dollar is $100. That works really well for me in crypto. I felt seen there
yeah.
when you said it that way, and just been easier to trade than try to oversize in it, um, because you can rinse and repeat these, or you can treat it as two trades, get the first trade, and then stop loss at entry and kind of hang out in it. It's just a much easier setup with the volatility of Bitcoin being 24 hours a day, and not necessarily always knowing what you're waking up to. But then again, back to that plan, just have plans on when you're going to buy. And I think for us in this last cycle, Mara was a good example of that because it wasn't
Yeah.
technically on a level. We had to wait for it to get that one more dip so you could trade it to 11 to 15 or whatever, as we said. So um, great sector, good
And I,
timing,
I
but
started,
you have to get the sizing
yeah,
right.
yeah, exactly. And I started talking about BitTier again on the breakdown at $10. That it sort of it dropped there for earnings, popped back up a bit, and then dipped down. I got back into it like 775 or so, and that's almost 100%. Now I sold quite a bit of it when it popped over 10, so that I could do what I talked about, which is like just let it go now,
Yep.
and this can just keep going. So really smooth chart. I like this one just because I still don't think a lot of people really even know about it, and you don't have the bag holder issues that you have with some of the others that are going to start selling off every 50 cents. So yeah, just we did really well in this sector. As people are all bulled up on crypto again, you just got to be more careful. And but it's still going to show up quite a bit in my option notes, I'm sure.
Yeah, again, I think for the price of admission, the market and crypto market, we do a fabulous job of just where we're gonna go or what is the current condition. Our timing is
Yep.
so flipping good, and by hours I mean years. So, spy, let's do that and get out
Yep.
of here. It is a holiday. My
Yep.
wife told me that. If I can drop the ball
Yeah.
there,
Yeah.
drop the
Exactly.
ball there. Um, 565. I mean, 50 SMAs right there. It's kind of why we picked it out in the first place. What do you need? These last two candles kind of showing you that the boogeyman, market maker, whoever, they don't want it to close above 565. We last two Fridays.
Yeah.
I don't really watch SPY time and sales ever, but I've caught it the last two Fridays a little bit, and definitely some people that want to hold it below this 565 number. So I don't think if we keep repeating the weeks that we've had, you've heard me say that where the sellers at for damn near a month now. I don't think we can hold it down here too much longer. And the last weekly candle, kind of a doji for me, kind of shows that about to happen.
This June 580C is it sold off some on Friday. It went bid side, but it's climbing up the open interest list. I mean, this was down towards the bottom of that a couple weeks ago when I first noticed it, and OI over
The 621.
the 620, yeah.
Got you.
And this very plausibly goes in the money. So
Oh yeah.
that, and well before June 20th, I think. So that's the look I'm seeing. And then this 535 September is the one that they use to pump the brakes to keep it around 565. In my opinion, like when I see the spikes in that one, it's sort of indicative of that. and so that's your range to me. And the put is further out, which means that we get, a pretty steep rally that then can sell off very quickly, and then they set back up. So, yeah, so that's where I'm at. So 580 short term top for now, but they'll reset from there, and we'll see. We'll see what happens.
Yeah, I don't.
So
I don't want.
I don't know the next chapter. I just know that this chapter's got to play out, and to me, it's that 580 move.
So short term, do you see that happening? That's the question I got
Yes.
for you. Okay, so we will test that short term. All right, then I think we test 6P.
Nice.
I really do.
I can live with that.
I think we test 6, and we're gonna get caught in the spot where we're gonna feel very bullish, like, because the late people are gonna finally see, oh, we just moved $120 on this thing. But unless that is, and it's gonna probably be my phrase of the whole year, unless the rubber hits the road, I think we live in that, let's say, 600 to 560 range. For months. I don't know how else to say it, but for a couple, I think we're there for a couple months, and we're starting to get smaller candles on SPY. I think is going to happen in that range. So, and then the elephant in the room, or the thing that would change that a little bit, is getting the tariff deals all in place, and then short-term bullish, and again until rubber meets the road. So individual names, I guess that's the best way to say it, are still going to be way better because they have more ground to gain. You can even say that with the Mag 7. Netflix probably ain't going to go to 1500, but Tesla could easily go to 330, 350.
Yes.
Stuff like that. So yeah.
Well,
individual names better for me.
So I mentioned months ago, I said, like, approach the market like it's going to be a lost decade. And, like, for me, people mean something different than what I mean when they say that. They just mean, like, your investments aren't going to go anywhere or do anything. And what I'm saying is that there is going to be a lot of range, but the stocks are just going to keep coming back to these same spots over and over and over again. I don't know if it's going to last a decade, but I'm just saying that your parabolic move in, well, LLY is my example here. That LLY is not going to go to 1500, but it's going to go in the your 680 to 900.
Yes,
and then it's going to do it again, and then it's going to have a smaller move within that range, over and over and over again. Whereas before, I wanted as many shares as I could get because I thought that was going to $1,000, and from where I was adding it in the 400s. So you don't get that kind of move in this market, but it's a great environment for traders, and so that's what we're after.
Yeah, LLY, good chart that if you're looking at a weekly, that you can see lack of sellers, and that just creates that volatility range. So it's good stuff. Short term,
honestly, HIMS is a great mover for LLY because they're the big sector disruptor, and it's like, are you going to make a deal with them in their network, or are you not? And then news comes out that they are, and then LLY says, no, we're not doing that. And then NVO does this, the same thing with them. So the weight loss thing is going to stay really good as far as range goes. But if you want one that's going to go 400% from here, it's HIMS, not LLY.
I'm trying to 100% HIMS every quarter. I'm 2 for 2.
Yeah, exactly right.
Yeah. Last question before we get out of here. This week, SPY close above 565. Is that a yes for you? The SPY test 580?
No.
Yeah, I'm with you. Same answers.
72 or something.
Same answers.
Like
yeah, I'm tight candle with you this week.
Yeah.
Only thing that changes that is Trump and the president of China hugging somewhere. You know,
Yeah,
they do
exactly.
the man hug. That's a little different story, but and if so, then
Right.
buy Funko. All right,
Yeah.
you ready to
Yeah.
get to?
Somebody with container ships full of crap that I mean, we're at a point now where some of them probably will want them to shove those containers into the ocean, and they'll do better on the insurance claim than selling them. But
100%, 100%. You ready to get to work, P?
yeah, let's do it.
Awesome. Like and subscribe, people. Link somewhere.